Yeah, so for me, I watch Bitcoin still. I think that you get a little bit of a little crazier action because of the merge coming with Ethereum. So it's a
Hmm.
little like for instance, Ethereum's rallied well over 100% off the lows from June all the way to the recent highs. Yeah, so 25 basis points is 0.25%. So it's
Okay.
really small, right?
Hmm.
But the key is when you map it over a many trillion-dollar economy, it actually does have an impact. And I think that's the key. So I mean, it sounds to us, whether you get a mortgage at 5.1 or 5.4 or 5, it doesn't sound like a huge difference, but it actually does make a huge difference. And
Hmm.
market, we know the markets and investors are addicted to that cheap money. It's like a drug addicted person. They just want that juice. They want that over and over again. And what the Fed is doing is pulling back on that, right? So it creates this kind of angst, this decision that investors have to make. And this is why, by the way, you see risk assets sell off when interest rates go up, like crypto and stocks, is because
Hmm.
what's going on is as interest rates rise, there are certain people that say, I could get 3% in a 10-year, and that's better. That's for no risk. I'll take my money out of risk assets because in
Okay.
risk assets, you could make more, but you could also lose a lot too, right? So the
Right.
higher interest rates go, the more it lures people away from risking their money in risk assets. So that's really what it comes down to there.
Okay.
At this stage, it's all about tomorrow, right? So we saw, first of all, today was an interesting day on crypto because you saw the dollar surge and crypto actually held up. That's
Okay.
actually the first time I've seen that happen in a while. Now, tomorrow we have the non-farm payrolls number, which is a jobs number, right? It's the big monthly jobs number. And the
Okay.
reason why that's so important is because it is going to determine, like, if it's a really strong number, 75 basis points in September from the Fed is coming. If it's a little bit weaker, then maybe it's just 50 basis points or maybe it's 25. So interestingly enough, I think the economy or the investors want a slightly weaker number, not so much that it's like, oh my God, we're going into like a Great Depression, like that would be bad, but
Right.
kind of like that Goldilocks number where it's not too hot, not too cold, kind of right perfect where it keeps the Fed from doing too much in the
Hmm.
near term. So tomorrow 8:30 a.m. watch for that number. You can literally have the dollar chart up. You'll see it go nuts and then
Yeah.
the markets will react off of that. Yeah, so for me, I watch Bitcoin still. I think that you get a little bit of a little crazier action because of the merge coming with Ethereum. So it's a
Hmm.
little like for instance, Ethereum's rallied well over 100% off the lows from June all the way to the recent highs,
Yeah.
while Bitcoin did much less. And I think that had a lot to do with the merge. And Bitcoin generally moves bigger anyways, but that was a huge move on Bitcoin, over 100%. But I would say going into tomorrow, what's really cool, and I'll share my chart here, is that you basically see that this big down candle here was 2 Fridays ago. Then we basically did nothing. Then last Friday, this was the down move. And then notice where we're hovering. We're hovering right on the 2017 highs. This trend line, 19,500 to 600 area. And then
Hmm.
we've gone sideways again coming into this Friday. So it's the last 2 Fridays have been huge moves, both down. And here we are sitting on this pivotal level going into this pivotal jobs report on a pivotal Friday where you're likely going to get a big move. And I think again, this is going to be a determining factor for whether Bitcoin can actually see a rally up, or is it going to get punished to the downside and we're going to see more downside here. So I think again, it's everything setting up to just have this big event tomorrow.
Yeah.
Again, it's hard to trade these things for me because I've seen so many times and I've experienced where it goes one way, then it rips the other way, and like you
Hmm.
jump on one way and then before you know it you're right, then you're wrong. so
Yeah.
so for the most part, I'm a spectator. I have my swing positions already in, but
Okay.
it's hard for me to trade this stuff.
What you're looking at.
Yeah, so I think I agree with what these guys are saying, is that like I love how you're saying, Blood, how you have to put it far enough above and below, because I mean markets just eat you alive like that. And just to go back to that real quick, I think the best example even was on Bitcoin over here, right? So this trend line was the infamous 2017 high, right? Everyone was like, oh, it's by the time we got to like 30, 28, everyone's like, oh, that's where it's going, right? So notice how on this day you closed below it. So anyone who had bought at that level and saw the close below, then they're stopping out. right? They're like, oh, it broke. Oh my God, it's going down to 10,000 now. Then what does it do the next day? It goes the opposite way back above. So then all those people that shorted below that line thinking it's going down, now they're getting stopped out the other way, right? So it's just back and forth. And they did it like here, and here before you kind of got that little uptrend. So it's just so crazy how that works and how the charts do that to you. But that's why you have to be prepared for these kind of overshoots when you do strategies like that. For me, it's definitely just noticing the bigger trends. So like when we're coming into a news event, I tend to go to bigger time frames because the bigger time frames will kind of smooth out the whippiness of that particular move. So you might go to the weekly chart instead of the daily chart, or even the monthly, and you're getting a bigger view of what's coming versus just that craziness from that particular day. So I think that's one strategy to use. Whatever time frame you're trading, just look at the bigger time frame and say, okay, is there something bullish here or bearish? And if there's a bullish pattern, maybe you whip down on some news, but then it could recover later on because the bigger macro pattern is telling you it's going up. So I think that's the best strategy for me.
Incorrectly.
No, that's exactly what this channel was. And by the way, these lines are perfectly parallel, so it just shows you how the markets work. But this is a big bearish pattern. Now we've broken down. This was another bear flag here. This is not the prettiest of ones. It's kind of a little bit of a rounded one, so it's not as secure, I would say, as the previous ones. But I mean, this pattern absolutely, and you can see it repeating. Right here was another one, and look at what price did, and then here, even right here, right. So I mean, if we just, and this is why learning charts is so important for traders, is because you see these things just repeating over and over again. So here was another bear flag, and look at what price did. Interestingly enough, look at over here. Remember in 2021 when we had that initial big fall, and look at the angle. So everyone was like so shocked when this thing broke out, and then over here they're like, oh, it's doing the same thing, but it really wasn't. It's actually, the angle is totally different. Here was a downsloping channel. Downsloping channels generally will eventually break up. Upsloping channels are bearish. They'll eventually break down. So again, it just comes down to like, you just pick up little things here and there in the charts, and it can really revolutionize the way you trade, or at least how you pick up on things.
I just want to know what he's... Go ahead.
No, I was just going to say, in just regards to the politicians, I just want everyone to understand, like, they're no better than retail investors when it comes to trading, right? So in a bull market, they look like geniuses, and in the bear market, Nancy Pelosi's husband's getting crushed. I mean, so there's always conspiracy theories. Oh, she knows what's going on. They're human, and then therefore they're emotional, and they're going to react to the same thing that everyone else does. So you don't have to worry too much. Now, it doesn't mean that sometimes there's not inside information they're privy to that they may act on, but in general, they're retail John Q. public. So yeah, I'm in Magic's camp that I do think we see further downside. I think right now everyone's kind of expecting we're going to break down, so it makes me think we might get a short-term little snap back up, get people a little bit more bullish, get sentiment on that bullish side. But I still think, I mean, it would shock me if this bear market bottomed here at 70% decline, when every other bear market, while the Fed was actually printing money, was down 80 to 85%. If anything, this one should be the worst one of all. It was definitely one of the craziest ones for altcoins and some of these runs on Shiba and Dogecoin. So I think minimum 12, 13,000, worst case 3,000, 3,500, which would mirror the Amazon collapse. And again, that's a worst case scenario.
Let's go.
If you I'm in for it. I'm strapped in. Amazon during the .coms, it was 95% drop. Now remember, Amazon went down 95% to like $6, and then it went to 3,300. So I think the important thing to take from that is that, if it goes to 3,500, that's not the end of the world. It just may be the best buying opportunity of your life, like you buying Amazon at $6 before it went to 3,300. So just be ready. Bear markets are brutal. They will surprise even me and most of us.